Stocks meandered for a second consecutive day, although the major averages did get a small bump after the release of those Fed minutes. A rise in technology stocks helped the NASDAQ turn in its 8th straight day of gains. By the close, the industrial average was up just 63 points. We're to 25,954 now. The NASDAQ added 2, and the S&P tacked on just about 5 points. The other big issue for the market is still trade, and a resolution of the U.S.-China trade talks could be just the thing that drives equities higher. Bob Pisani takes a look now at where stocks may be heading.
The market is pretty clearly pricing in a trade deal. I guess the question is, how much exactly is priced in? Art Casher from UBS thinks it's at least 50% priced in, but it could be more. And with that comes potential risk to the recent rally. So if a trade deal is announced by that March 1st deadline, the uptick in stocks should be fairly modest if it's priced in. And the market seems comfortable knowing the deadline could be pushed back or delayed. But if the White House announces no trade deal and tariffs on China go to 25% from 10%, that's not priced in. Stocks could drop significantly, perhaps even back to their December lows. So with the S&P 500 hovering near 2,800, what could push it over 3,000? Besides a trade deal, talk of the Federal Reserve possibly easing would be significant, and any clear sign that the Fed would slow down the unwinding of its $4 trillion balance sheet. Also, less talk about an earnings recession. That would be a big help to the markets. I think, though, most importantly of all would be less talk about a global slowdown. Some positive growth in Europe, that would help. Some economic stability in China, that would help. And even better economic data out of the U.S. than we got last week with those dismal retail sales and disappointing industrial production numbers. Meanwhile, new highs are expanding. The market looks good. There's little reason to sell right now, and the Dow's on pace for a 9th week of gains. The problem is it's hard to argue that the market is really cheap right now, given how far it's advanced off of those December 24th lows. The bottom line is this: it's looking very hard to move the market forward, notably, unless you get stability on the global growth front and some kind of trade deal in the mix. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.